Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark tells us Canadian companies with American revenue streams are doing well. Martin Armstrong from Armstrong Economics warns the government bond bubble is the biggest threat to a healthy economy. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
How is gold doing?
Well, it's one of these markets that's been stuck in a reasonably tight trading range, and we think it is got itself boxed into a corner at this point. The typical action, we've talked about the relationship between the oil market and the gold market, and how when you have that hard break in the oil, such as we did into January and the retest of the lows in March, that typically will put in a high for gold, and the gold market then becomes capped for the next 2 to 3 months. So we've now passed that time frame, and it's appropriate to now start talking about it again. Because when we look back, we see that if you start to break out now of this last 2 to 3 months trading range, the bottom end being at the 1140 and the top end being at 1230, that there is a concerted trend that will happen after that. If it's on the upside, breaking through 1230, you will tend to usually to have a good 2 to 3 month run. And the miners become the best way in which to participate in that play. If the break is to the downside, and for now that would be the 1141 level. If we were to just hold steady here for the next few weeks to the end of the month, then we'll be looking at a support that will be more around the 1170 that's critical as far as that's concerned. And giving up that, the decline could probably take us into the latter part of the fall, because that's the way these tend to go. If the day break is to the downside, it tends to be more of a grinding motion to the downside, so just stair-stepping down, you'd make a new low, bounce back, and then a week or two later make another new low, so just grinding lower. Seasonally, we're coming up to what has been in a bull market one of the better stretches, July through the end of August. Actually, that's what created the big high back in 2012 when we were up at $1,900. However, in flat or bear markets, only about a third of the years do we break out in July. So we want to keep an eye on this. We've, as I say, clearly got ourselves into maybe a time and price window that could provide some opportunities.
How is the Canadian dollar doing?
We had a pretty good bounce into midweek on the Canadian dollar, and then it started to slide off again. Nothing big time at this point, but enough that the Canadian companies that have got these U.S. revenue streams, and those would be, you've got some waste management companies, you've got the forest products definitely sitting in there. They're starting to see some good bids come in underneath them as well. The forest products in particular, from mid-June through the end of July, early August, have got a nice seasonal bias to them, so that might be an opportunity for people.
One analyst I talked to said he liked the U.S. dollar best and the Canadian dollar second best. He said other currencies probably are going to slide off.
Well, yeah, on a relative basis, it's the Canadian has been holding in reasonably well. You take a look at the yen, which has really been a sore point on the downside. That one definitely looks as though it's got more pressure to be had in for that perspective. But being second fiddle to something as strong as the U.S. dollar is in something that it's nice to have, but not going to benefit us as far as the. I'm lost on this one.
I was going to say nobody likes to chant we're number 2.
I know I was going to say that, but
And what about China, Shanghai? Now, there's a market that's been defying the experts for, I would say, the last month.
Yeah, this one just continues to step up, make new highs, and then have small pullbacks. I mean, it is getting just lots of publicity. The stories out there about farmers who are coming in from their fields and they're making more money day trading stocks on the Chinex exchange and they want to spend more time in front of their computers than they do out in the fields. There was some talk that the China A shares might get a listing on the MSCI World Index. Morgan Stanley has said midweek that yes, they have plans to do that, but not right now. So that the market was actually, I think, absorbed that bit of news rather well. Of note, I have some charts that might be of interest to people. I have done a correlation comparison of the Shanghai market for this bull market run that we've had here with its correlation to what we saw in the gold market in its last run. And there are some very interesting things to look at. I think might initially at this point be looking for a target on the Shanghai just shy of 6,000 and a pretty good correction from there.
Ross, thanks a lot for chatting with us.
We'll be with you next week.
And if you'd like to have some of those charts that Ross was talking about, you can contact him at ross.clark@cibc.ca. Coming up next on This Week in Money, Martin Armstrong.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, the founder of ArmstrongEconomics.com. Welcome to This Week in Money, Martin.
Well, thank you for inviting me.
First of all, Martin, we'd like to know how your movie, The Forecaster, is doing and where people can see it.
Well, actually, in Canada, I think it is going to start in theaters soon. I think, by this month or July or something. I'm not really that sure what the schedule is. But in Europe, it's just been amazing. I mean, it was, I was getting like standing ovations and it made the nightly news, the top 3 stories in the country. So it was like really a shock. But, I think the difference is, in Europe, they already know they have a problem. We're still walking around in Disneyland yet.
Could you maybe tell people what the movie's about?
It's largely they call it more of a political thriller than anything. But it's really about, the confrontation between myself and the banks with their market manipulations and things of that nature. And it even has risen up to the level of trying to take over Russia, and that's how Putin got in. And it's actually probably going to show in Moscow. They're waiting for approval from the Kremlin. Right.
Are you going to be there for it?
I don't think so. I mean, I know they would like to get me over there. I mean, we do have a lot of readers in Russia, an amazing amount, but so I'm not sure. The jury's still out on that one.
Well, it would be interesting, and of course, so whenever he doesn't like somebody, they do tend to end up in jail.
Well, actually, the basis of this movie is going over on the attempt to manipulate markets, which involved even blackmailing Yeltsin, etc. And so Putin has long said that the fall of Russia was really a CIA plot. So I don't say that this is a CIA plot. I focus more on the bankers and what they were doing, but I can certainly see where he would not necessarily be upset with it.
I mean, I personally have wondered, how did Putin make all of his money? I mean, as president or prime minister, he would have been making, I think, about $120,000 a year. Yet he's said to be worth something like $50 billion.
Well, you have to keep in mind that the difference between Russia and China is rather significant. And I mean, I worked, to both places over the decades, and I went behind the Berlin Wall before it fell. And there was a striking difference between the communism that was led largely really by Stalin and what you saw in Asia. In Asia, it was more of what is called the tall poppy syndrome. So as long as you didn't stick your head up, they really didn't care what you personally thought. Whereas in Russia, Stalin was very paranoid. I mean, he killed tens of millions of people. They don't even know how many. And he killed at least 8 million Ukrainians. That's why the Ukrainians hate Russians so much. But he was concerned about anybody that thought against him, and so he was more concerned about that. So children were actually raised in saying, gee, if your parents speak badly about the government, report them. The state is really your parent, stuff like this. So Russia, when it did move towards, I would say, capitalism, you simply replace the government with oligarchs. That's it. You can't open a restaurant in Moscow and compete with them. I mean, they'll basically kill you. So it's really, I would say, along the lines where they just have not quite achieved the same degree of changing the economy as you saw in China. So in China, they left the mental capacity intact. So as soon as they were free, boom, the Chinese just ran. Whereas in Russia, it's been still, just replace the government with an oligarchy. That's it.
You have the Princeton World Economic Conference coming up. Can you tell us about it?
Well, we've been holding these for decades, and they're gatherings where our clients come in from around the world, and we spend 2 days kind of going over the global economy, what's the computer showing, and so it's more of a session of, all right, what do we do? It's allows you to see the whole world and how it's connected, and it's the difference in forecasting. I mean, some people like to try and take shots at me personally because the way, it's kind of very old school in the sense of trying to forecast something from a personal opinion. That's why forecasts are never consistent. And nobody on that type of a basis is ever going to be right all the time. Maybe we had a bad day, maybe you had a fight with your spouse or whatever. I mean, you drank too much, whatever. There's just tons of different reasons why you might not be on point from one day to the next. So this is not a question of my personal opinions or forecasting. Largely the clients are interested. Everybody understands what we're doing. They come in and the question is, okay, what's the computer say here? So that's really what this is. It's a global event where we have people flying in from everywhere, and it becomes a good networking session, etc. A lot of people end up becoming, friends with people around the world, and they constantly follow and they share ideas and things that's going on.
When is it?
We're holding 2 this year, one in Princeton, New Jersey. I think that's November 7th and 8th, and then a couple weeks later, the European one will be held in Berlin.
Both excellent locations.
Yeah, well, Berlin's easy to get to for everybody. They kind of call it the New York of Europe. So there's, it's a very busy city. It's not as quaint and quiet as some of the other European cities.
Can you tell us about your economic confidence model, and what does 2015.75 mean, and how does the confidence model work?
Well, effectively, it is mapping out the business cycle, which every economist has always admitted there is one. Keynes just tried to kill it by manipulating it. Marx actually tried to kill it outright. And Paul Volcker wrote a piece in 1978, and he says, well, rediscovery of the business cycle. And because it no matter what it is, it always wins. And it's kind of like government has been trying all these years to make it every day perfectly sunny and never rain, and the idea of this new economic principle was that we can manipulate it to do what we want, so there'd be perpetual growth. And it's just never been achieved. So this is largely the business cycle, and each one, you just have to look at it realistically here. It's not that any particular thing will always peak every 8 years or so. It's that the activity of humankind is that way. So each peak is a different sector in a different country, etc. So, like in 1987, everybody was here, and then G5 stood up and said they were going to devalue the dollar by 40%, so everybody sold. So that created the 87 crash. And then what do? The foreigners took their money out. So the Japanese took it all home and started investing in the Nikkei, and then that makes a bubble there within 2 years. And then when Japan peaks, the government tries to hold the market, and the manipulation basically caused a decline for over 20 years. Capital then moved to Southeast Asia. Then you had the Asian currency crisis in 97, but the markets peaked like in 94. Then the money was all moving back over here. That was the exact day of the low in the stock market when the Southeast Asian markets peaked in 94. And then the money comes over this way, and then the euro is going to be forming in 98. So everybody goes, oh, let's sell that. Europe's going to be the new flavor. So it's, money is kind of like fashion. It just runs around the world. And so that's what this is about. It's projecting when we're going to see a bubble in these different aspects. This particular time, it happens to be a bubble in government. So it's, we had the tech bubbles, we had gold, we had, stock market. We've had, these peaks in all these different areas. But this time it's the bond markets and government. So you see interest rates extremely low, going negative, and this is making pension funds and everything really insolvent, and it's going against the government dramatically. So we saw like the long-term, bonds from 10 years and up, crash to bunds in Europe, etc., and capital is just moving extremely short-term. So this should be the peak, which you will see largely in the negative interest rates on the short term. And then as the bonds have started to rise, it's showing you that it's the private sector that controls interest rates, not the secondary ideas of government or the central banks or anything of that nature. They can control the short-term rates, but they cannot control the long-term. So, that's even what, QE 1 through 3 were. It was basically the government or the central bank trying to buy back the long-term paper to create a shortage there to reduce those interest rates. Because they can't dictate the interest rate on long-term paper directly. So they were just trying to influence it. So this time it should be the peak in government, and I would be very concerned about government bonds, pension funds, all these things. Most of the states are really in serious trouble at this point. And so after the ideal turning point is October 1st, and after that we should start seeing government become more aggressive, trying to increase taxes to hold on to their power, but they're losing it.
Martin, what is the 7-year Shemitah cycle? How does that work, and what is it?
Well, that was largely a Jewish principle, which a lot of people were beginning to realize, well, maybe it wasn't such a bad idea, but that debt really should be forgiven, once every 7 years. And this whole idea of socialism has been a complete fallacy. Government likes to point its finger and say, oh, the rich don't pay their fair share or whatever. But honestly, the problem isn't them. If you took all their money, it doesn't matter. You're still not going to balance the budget. They'll spend more than what anybody has. So our biggest problem really is government itself. It just consumes money. It doesn't create anything towards the national wealth. It consumes it. So this is a sovereign debt crisis that we're in, and I think this cycle of 7 years maybe is learning what their experiences were, and you should be careful, because you can go to our site. We've published charts on the national debts, and at times up to 70% of the entire national debt didn't go to help anybody, didn't build roads or schools or hospitals or anything. It went to interest. So that's the effect of long-term debt. They don't pay anything off. They just constantly regurgitate it year after year.
You've posted bond charts from the 1920s a number of times. Are government bonds in the U.S. and around the world in trouble?
Yes. This is what this cycle is all about at this point. And we should begin to see interest rates rise. But taking the interest rates down as they did to try and help the banks has really created a tremendous nightmare, and it has made just about everything insolvent, from pension funds to the annuities, insurance companies. It's just crazy.
Does your model show any panic happening with the S&P and the Dow?
No, not really. There should be a decline that scares people initially, but that will then maybe perhaps create the final peak in government, as far as sending capital over to be what we would call a flight to quality. But honestly, it still looks like the U.S. stock market may be the only place to kind of park money, and it after a minor correction, it looks as though it may be going up quite dramatically into 2017. You're
not predicting a major drop then?
No, not major. Honestly, if you look at it, what you see is that retail participation is at historic lows. You've probably, if you read the news here and there, you'll see that liquidity is at is gone. The market has just never come back from 2007. And although we see nominal highs in many markets, China included, the highs are really 2007, and they have begun a decline economically that won't turn around until 2020.
Just how bad of a downturn is China going to have?
We're probably looking at about another 25% reduction, just as the government went trying to stop the speculation in real estate, and the capital rushes over to the bond market. It's very clear that the Chinese act in a same accordance with human nature everywhere.
Yes, they want things to keep improving, but you don't always have the resources to do that.
No, and that's the problem with this era of new economics, is that, the government needs more and more power, and we can create perfect utopia, and there'll always be 3% growth, etc. But, it's just insane, because, government is, we call them a public servant, which is very true. It's like hiring a maid at home. She doesn't increase the income for the household. She costs money. And that's what government really is. The larger the government, the more it consumes. And if you look at France, why is it in such trouble economically? And taxes collected from the public are almost 50% of total GDP. So you're just oppressing the people. You're not creating jobs. You're going after small business, and that's what creates 70% of the business. 70% of the jobs is small business.
Well, France has a national income. Even if you're a billionaire there, you still get a certain amount from the government to live on every year.
Well, even those things are just, the whole system in France was based upon this idea actually of communism. That's where Marx, got it from. It wasn't one of Marx's original theories. He was more on the socialistic side. The commune was an experiment that actually began with the French Revolution.
Off with their heads.
Yep.
The U.S. dollar is off its high. Is there still support for the U.S. dollar index, and where do you see the U.S. dollar going?
Well, basis really on the euro. The euro came crashing down. It held our support, our major supports in the 103.50 area on the cash, and on the upside, the resistance is really at 115, and then it jumps up to about the 120 area. That's about is the best you could possibly see a rally. And honestly, I mean, Europe is the 800-pound gorilla in the corner of the room. So it's just not working out very well, and so the dollar should back off a little bit, but then we're probably looking at a very strong rally for the dollar after going into like 17.
What's going to happen with crude oil?
Crude oil is pretty much crude oil is being replaced. Honestly, there's so many other new technologies that have been coming in. When I was in Amsterdam, I mean, it's very interesting. I got picked up in a taxi. It was a Tesla, and you see, I mean, literally they have like a 2-story parking garage that would normally be filled with cars. It's filled with bicycles. They take the train in, everybody has a bike, and they take the bike and they use the bike in the city. You have solar energy popping up everywhere. I mean, even Saudi Arabia has come out and admitted now that oil is going to be basically replaced. So, as we're seeing more and more electric cars, I mean, BMW is now putting out I think they call it an i8. I mean, it looks like a super sports car. It's electronic. I mean, so we've gotten to the point where oil gradually is going to be further moved out.
Well, the G7 announced that their plan was to phase out fossil fuels by the turn of the century. And really, if you take a look at our past history, 100 years ago, the horse was the way people got around. The airplane had just been invented. Motor vehicles were just being used. Even the German army in World War II used horses to a great extent. So I guess we'll be replacing oil horsepower with electrical horsepower.
Yes, I mean, that's clearly where we're going. And, I mean, technologies and alternatives have been improved dramatically. So I think you're not going to see oil, make new highs or anything like that. I think eventually you'll see it begin to move back down.
Martin, what's going to happen with other currencies besides the U.S. dollar, the euro, the Canadian buck?
Well, the euros is really the huge problem. I think probably the best way to explain it was that they came to us when they were designing it. And I warned them that unless you consolidated the debts, the currency would fail. They understood it back then. And they said, okay, fine, but they didn't think if they brought it to the European population that they would vote for it. So they would see it as a bailout for different countries. So what they wanted at that point in time was just to get the permission first to really begin a federalization of Europe without telling them that's what they were doing. But they just wanted to get the currency in. And once they got the currency in, then what would happen was you would come in with phase 2. Problem is those people left and new people come in and they never heard of phase 2. But the European banking system is a total disaster. And we don't have this problem in North America. And the difference is that if you can imagine, if every bank was allowed to keep their reserves in the debt of provinces or states, then, like California gets in trouble, and then you're going to say, oh, well, which bank has the most California debt? And our reserves are federal only. That's the way Europe should have been. And that's why I said you have to consolidate the debt. They didn't do it. So the reserves of the banks in Europe, they had to be politically correct. So they had to have a piece of everybody. And so as Greece goes down, it takes down the banking system. So the structure is not conducive. There are a lot of people that hate the dollar, and others talk about, hyperinflation and all that. They have no idea what they're talking about. Hyperinflation, that kind of stuff, requires government to honor its obligations. Just look around. They're not doing that. They're cutting, whatever they really owe, changing retirement ages, reneging on promises left and right, and they're aggressively trying to tax people and collect other taxes that they theoretically now claim they are owed. This is all deflationary. And unfortunately, this is the phase that we're in. So the dollar right now is going to remain as the world, reserve currency, and even by default, it's becoming stronger because you can't park money in euro, and the bonds in Germany were the best bond market, but they were not buying it because of confidence in government. They were basically betting that the euro was going to crack, and therefore they'd rather have bonds, and because if it cracked, they would get Deutschmarks. That was the trade in Europe. So now all of a sudden they realize they're not going to break up. They're going to really, Merkel's, doing everything to try and stay in and acquiescing to Greece. So all of a sudden, that trade is over with, and then the bonds have crashed. So we're looking at significant shifts in capital, etc. But the dollar is going to be even stronger. It's the only place to park money. Big institutions can't park in Chinese debt, Russian debt. Where are they going to go? So the dollar is the only place, and that will change, but probably not until after 17.
Do you think anything significant is going to come out of the Federal Open Market Committee meeting on the 17th?
Well, the Fed, I think, realizes that, one, they are not likely to lower interest rates. If anything, they're going to raise interest rates. You have the IMF coming out pleading with them, please don't do so. But honestly, that's what's happening. It's a stage in the game where you have to look at this. The Fed is not stupid that way. They see that they need higher interest rates because how are you going to stimulate something when it declines? And if the capital flows move here because of problems elsewhere, it's going to move into the equity markets. And so how can they lower interest rates when the stock market is maybe going sideways, but it's still near the record highs? So they're going to have to raise interest rates, and they're going to do so because they have to be seen as trying to stop an asset bubble.
Gold and silver continue to be capped on rallies or their key levels of resistance that are needed to keep them under pressure into the second half of the year.
Yes, I don't see any change in trend there. The earliest is as we put out in a report, which in the fourth quarter this year, and the latest is probably the first quarter of 16.
What does your model see ahead for China if their continued slowdown in the economy continues?
Well, China is in a correction phase at this stage, but its economy should bottom out by 2020 and then rally. And I think you're going to see China, it will surpass the United States as far as the largest economy per se, but that doesn't qualify it as the largest, financial capital of the world. To achieve that, you have to have economic stability and enough of a free market for capital to move into without all kinds of regulations and permissions. For example, in Japan, you could not issue a bond in Japanese yen between two people in New York. It was illegal. You had to go back to the Japanese government for permission to issue a bond in their currency. The U.S. had no such restraints. So that is why the U.S. dollar is really the reserve currency. And so China, it will eventually replace the United States and become the financial capital of the world. But we're probably talking about another 15 to 20 years.
Is the threat of a cashless society something that we need to worry about?
That, I think, is our biggest possible threat to civilization itself. If we move to a cashless society, I doubt seriously it would work, but the accomplishment from the government perspective, you eliminate the possibility of the bank run. So if there is no cash, you can't run down to the bank to take your money out. How do you get it out? And you say, please put it on a CD-ROM or a flash stick or something. So that's why Europe will probably move before anybody else. And Denmark is leading the charge, wanting to eliminate all cash transactions in retail stores, etc., by January 1st, 2016. But they have had to put in a couple exceptions that they realize may be required. And that is, what if you're sick? You don't have a computer. You're not that, plugged into the world, but you have cash. You go to a hospital and they say, well, sorry, we can't admit you. You got to die because you're not part of the system. So there have to be some exceptions. And the rest of the world, more than half the world is not technologically even capable of an electronic currency. So I don't see there would still have to be some sort of a tangible currency to interact with the rest of the world.
Well, I think here we are in Vancouver in an earthquake zone. In a major disaster, all the cash machines will be shut down because there won't be electricity. How would you buy food or energy or gasoline for your car?
Exactly. There's a lot of, serious problems with this, but you have to look at it from the government's perspective. What are they trying to accomplish? One, stop bank runs, because they're talking about bail-ins, not bailouts anymore. So they just want to prevent the problem. You can't take any money out of a bank. Two, they feel that we are always the problem, and that is that we don't pay all our taxes. So if you go to electronic, then everything is accounted for and they can get their pound of flesh. But the third problem they claim is for law enforcement, that you eliminate the drug trade and all these things. But what would you end up with? You're in effect, what they're really saying is they want to create a government that you cannot buy or sell unless you are approved by the government. That's it.
Well, I've heard that if they eliminate cash, A, it could lead to hoarding, and B, the mob itself would develop some kind of a currency so that their illegal goods could be still purchased.
Well, you would probably have to end up back at some sort of a barter type system. I know a lot of people, talk about Bitcoin and cryptocurrencies. But honestly, they don't have the tanks and the guns. The government can simply make it outlaw that you do any transactions in that, and that's it. In Greece, they made it, they're going after cash there, and that you cannot spend more than 70 euros in a cash. You can't do any transaction over that. It's completely illegal. In France, they're making it 1,000 euros. It's illegal for a hotel to accept you to pay your bill in cash. So it's getting really, really crazy. And this is largely, you're not going to be able to buy or sell without the approval of the government. That's it. That's where they're trying to go.
Does cyber warfare have the potential to distort markets and economies?
Well, we are getting much more sophisticated. So I think the main centers, etc., are fairly safe. I mean, there's still hacking going on more into the corporate side, but it does look, that type of warfare has existed even before electronic. I mean, you can buy counterfeit British pound notes that Germany used to print during the war. During the American Revolutionary War, there were counterfeits that were produced of colonial currency by the British government. So, I mean, you've always had that type of warfare, which has existed, at least, from the 18th century.
Does the peak in government in 2015.75 coincide with a peak in corruption?
Yes, I think it's before they at least tried to hide the corruption. Now it's gotten to the point that they don't even care. And I mean, you look at Hillary Clinton. Effectively, what is that about? It's largely about them. She's while she was supposedly Secretary of State, she cuts a deal with her, with Haiti for all the mining contracts, and they go to her brother. I mean, this is what's been going on all the time. It comes out, 30 years ago, a politician would have to resign. I mean, look at her. She erased all her emails. Said, no, that's it, I erased them. Sorry, can't have. Can you imagine if Richard Nixon did that in 1971? I mean, they would have dragged him out of the White House in handcuffs. If he said, no, sorry, I just erased all the tapes. So that's a symbol of the corruption that we're in. I mean, they really just do not care. They assume that the attention span of the public is maybe a week at best, and they'll forget about it.
Well, considering people debated what color the dress was on the internet, when a lot of other bad things are going on, maybe they're not wrong.
No, I mean, it is our fault. All right? Politicians have been, Aristotle said there was one under every rock. Nothing's changed in thousands of years. And effectively, it is our fault. They steal a little bit. Well, gee, I got away with that. I mean, anybody that's had kids, it's like a 2-year-old, and, they're just going to keep going until you absolutely come down and slam on them and say, no, but they'll keep it up. They keep testing their boundaries. And that's what politicians do. Oh, I got away with that one. All right, fine. Yeah, some noise. It died down. They forgot about it. And it's just amazing. I mean, but Obama's approval rating is below that of George Bush. And everybody said, gee, he's been the worst president in history. I mean, Obama's trumped him. They don't stand for anything that they say. It's all just total BS. He stood before Guantanamo Bay during the elections and said, oh, he would never do something like, these people are entitled to fair trials. It's still there. They're not put on trial. He was against Bush and the NSA, and, this is unconstitutional. And here Congress says, no, okay, fine, you can't. And he goes to the court and says, we're not going to enforce it. So it's ridiculous. I mean, nobody cares. They just really don't care. And they just assume that we're a bunch of stupid schmucks. We don't do anything about it. And we let it happen because we don't hold them accountable.
The Bilderberg meeting is taking place right now in Austria. What is it, and does it benefit countries or economies at all?
No, I mean, I know a lot of people put a tremendous conspiracy theories in this, and there's some sort of cabal and people actually can control something. I mean, I know a number of the people that are actually attending and have had to deal with them. They're not the brightest bulb in the box. And it's just the way it is. They can sit there and talk about things, but they really have no power to actually alter anything.
It's a meeting of the world's biggest billionaires, isn't it?
No, not really.
No?
I know it's plotted a lot like that. You have academics there. You have Robert Rubin, who basically was a Treasury Secretary and got Glass-Steagall overruled. He's there. It's not just a money club. It is a political club as well. So it's everybody kind of getting together there and saying, gee, what should we be doing and try to influence things. But it's just a lot of talk. Nobody really has the power to change anything at this point. Unfortunately, we're going down the tubes and they can't do anything about it.
Canada is looking to fingerprint foreign travelers, not including those from the U.S. How would that affect tourism in Canada's standing around the world? Although that's pretty well what the U.S. does too, isn't it?
Yes, it's applied largely. Canada's proposal is that they would apply it to anybody that requires a visa to go there. Honestly, I don't understand all this paranoia, but it's typical of all governments. And just take the Boston bombing. Okay, you had a couple of kids. They talked to each other openly on cell phones. When they finally figured out who they were, they actually used their cell phones to find them. All right? Now, if the NSA was collecting every single phone call, all right, why were they incapable of preventing that attack? Hillary Clinton, okay, fine, she erased her emails. Well, the NSA actually would have a copy. So why aren't they coming forward? It's just they gather everything possible without the ability to actually prevent anything. It's just, it's the typical end phase of an empire. The Venetian Empire, if you go to Venice for a vacation, go and look at one of the mouths of truth. There were stone mailboxes that if you didn't like somebody, you just wrote whatever you didn't, you said, oh, they're really this, that, they're really some evil person, and you stuck it in this box anonymously. You didn't even sign it. And that person was then arrested, investigated, imprisoned, and more often than not killed. So that's where we're at. It's gotten to the point the police have been militarized. It's no longer the 1950s, Norman Rockwell picture of a policeman sitting on a stool next to a runaway boy, trying to help people. It's become very nasty. But this is the typical end signs of a government that is losing power, and so what do? To hold on to it, they have to become much more aggressive.
So more of a
collection of data is just ridiculous. It's not for what they claim it is. It's basically they want to know absolutely everybody and everything.
So I was going to say more of a Gestapo or Stasi style of policing.
Stasi, it's definitely. It's everywhere. I flew from Zurich down to Italy, and I parked my car there in the Zurich airport and when I was in Italy, I lost the ticket. I came back. I couldn't find my parking ticket. Oh boy. So I had to go into the office to say, listen, I lost my parking ticket, and what's your tag number? So I gave them the tag number. They told me right to the minute when I pulled in where the car was parked and how much I owed.
So you didn't really need the ticket anyway.
I didn't need the ticket. I had to go there, and they said, well, did you come in on one day versus the next day? I said, I really don't remember because it was an early morning flight, so I came in and I stayed at the hotel the night before, but I said, I don't know if I came in before midnight or after midnight. I said, I really don't know. And they checked it, and they said, no, you came in at 11:30, so you have to pay for that day, too.
Martin, anything else you want to throw in here? What can we expect in the future?
You have to understand that each one of these business cycles, it's always something different. One time it's commodities and gold boom. The next time it'll be a stock market boom. Then it'll be a real estate boom. This one is bonds and government. All right, so be very careful about government, no matter what government we're talking about. In the States, it's municipal governments. Stay away from them, because honestly, it's not whether they are this city's debt is okay, they got a balanced budget, blah blah blah. That's not the issue. Once one begins to crack, it becomes a contagion, and they just look around and they sell the whole sector. So even you have bonds that you go, this one's really okay. Good luck, because it's going to go down. And that's largely what you have to understand, how capital moves. And I would recommend people can go to Herbert Hoover's memoirs published online for free at his library, and just look at 1931 and read it. And then put in your mind Greece 2010. It's exactly the same thing. And he said that capital acted like a loose cannon on the deck of a ship in the middle of a hurricane. It was shooting off in every which direction so fast they couldn't form a committee quick enough to figure out where it was going. And that was Greece. I've been in the industry for a long time. I've actually, owned a couple of brokerage houses and been a hedge fund manager. So I know how this stuff functions. What happened in Greece? As soon as Greece started to go down in 2010, the traders look around, that was good. Who's next? Then they went after Portugal, Spain, Italy. This is the way it functions. You win one, who's next? So that's why I say be very careful about bonds, because when the first one goes, they're all going to go.
Martin, where can people go to learn more about Armstrong Economics?
You can basically go to our site, armstrongeconomics.com. That's probably the best place to start. That's for the general public. After that, we have institutional things we have a huge site with a tremendous amount of content. So, people can rummage around there and find articles documenting charts on just about everything.
Martin, thank you very much for chatting with us.
Well, thank you for inviting me.
And that wraps up the show for this week. Thanks to our guests, Ross Clark and Martin Armstrong, and thank you for listening. Comments or questions for This Week in Money can be sent to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.